Hey everybody, it's Randy with Cummings Company Realtors, and today I'm here with James Schroeder. James, introduce yourself, please.
Hey, thanks a lot, Randy. I'm James Schroeder. I'm with Community Title Network. We are a local and regional title company. All of the business that I do is in Maryland, but we are licensed to do business in Maryland, D.C., Virginia, Delaware, Ohio, and West Virginia. But again, I'm right here. I'm located in Baltimore City, and I've been doing title work for roughly 30 years.
30 years. So you've seen a lot of stuff. I got a question for you that I didn't prep you for, and I apologize for this ahead of time, but it just
Of
made me
course,
think
of course you did.
when you said 30 years. So how many years ago, I'm sure we could Google it and figure it out, but how many years ago was it that Maryland started initiating that tax if you were an out-of-state seller? I know there's always been taxes, but wasn't it like 4 or 5 years ago? 6? I mean, it's been
It's been a while. I think it's longer than 4 or 5 years ago. I don't know exactly when they started doing that, but it's kind of interesting, and I don't know why it has cropped up again. But people are now trying to call it an exit tax,
yeah, I've
and
heard that a lot.
yeah, it's not. And I don't know where that came from. I don't know where people
I
are
think it came
hearing
from
that.
California trying to keep everybody in,
I don't
and
know how it got here,
yeah,
but it seems like everything starts on the West Coast and ends up here. But there is not an exit tax in Maryland. An exit tax would be, anytime you sold a property and left the state, you'd be taxed. What you're talking about is the non-resident Maryland withholding tax. So, for example, if you are a resident of New York and you have a property in Ocean City and you sell that property, you're not a resident of Maryland. So, what was happening was these people were selling the property, they were profiting from it and not paying Maryland the rightful tax that they owed. And then something to do with state lines, they couldn't cross, they could go after them, but it was only here. They couldn't really go after them in New York. So what they started doing was saying, well, look, we're just going to collect it up front, and then you can try to recapture
yeah,
some or all of that tax. But the difference is if you're a Maryland resident and you sell that same property in Ocean City, you do not pay that non-resident withholding tax. Now,
even if you then move to New York City a week later.
So basically, there's a form, I think it's WHAR, and that says basically you're stating why you're exempt from the withholding tax. And there's two sections. It's I'm a Maryland resident. The question is answered and it's done. Or the second one is I'm no longer a resident of Maryland, but this property was my primary residence at least 2 of the last 5 years and is designated as my primary residence on the website for the State Department of Assessments and Taxation. So it has to be both of those things. So, if you're selling your property here, but then you have moved to Tennessee, and you've changed your residency, you're still a Maryland resident. You were still a Maryland resident, and that was your primary residence at least 2 of the last 5 years. The problem that we run into sometimes is people do something that triggers SDAT, State Department of Assessments and Taxation, triggers them to change that to a non-primary. And then they have to call and they have to talk to them and say, look, it was my primary. I'm trying to sell it. I don't want to have to pay the withholding tax. I was in Maryland. And normally it's a pretty easy process. But at the end of the day, is if the withholding tax was there is a form that you can fill out in advance of settlement. It has to be 21 days in advance of the settlement. And that information and form is filed with the Comptroller of Maryland. And basically what they do is they look at it and they say, you're exempt from the tax, or this is the tax that we need to collect on your behalf. That rate for individuals just went up recently to 8.75%. So you may only have to pay, say it's 6%, but they're going to collect the maximum. And then what you would have to do after the fact is file a Maryland tax return to try to recoup some of that. But
And
so
it's a
there
lot easier
is,
to keep your money than it is to ask for it back.
yeah. Yeah. So it's a process. And I always say when you're getting into a real estate transaction, especially when you're a real estate agent that's listing the property, that's a question you should ask. Like, where are you? And if they say, oh, I'm living in Tennessee now, then that should trigger like, hey, I need to start asking these questions to get ahead of this.
I just had that happen to me. I had a house that I put on the market. The whole house is full of furniture. The lady lives there, everything. And I didn't even think to ask her, like, hey, do you not live here? I'm like, she obviously lives here. Like, it was just
Right.
like, I don't like if the house is empty. I'm like, hey, did you live here? I go through that stuff with them. But yeah, she was a little bit mad at me that she was going to have to pay the Maryland tax. And the reality is, whether I told her or not, she was going to have to pay it anyway because she didn't live here, but she made the house look like she lived there. And so, yeah, it was kind of a mini fiasco. So I think one thing we can correct is the fake news media has really gone to town on this. I just had an argument with a really sweet, super nice client yesterday. I mean, it wasn't an argument like we were, beating each other up or anything, but he was adamant that he was going to have to. He's lived in this house for 20 years. We're selling it. He's moving to Florida, and he was adamant that he was going to have to pay. He was just telling me that I was wrong. He even had me for just a second thinking that I might be wrong. And I was
Is that called gaslighting?
yeah, yeah. Like, no, Randy, you're crazy. I'm like, no, I'm pretty sure I do this for a living. I'm pretty sure. Like, what I don't know about title, we could write books about, but I know enough to be dangerous. And I know enough about taxes to be dangerous and stuff like that. So if it's 8.75 for humans, how much is it if you have a business that is selling, like an LLC or something?
8.25%.
8.25. Any idea why you think they're cutting businesses a break?
I have no idea.
Maybe somebody padded the
Maybe they just realize that there's more individuals that are non-residents than entities. There was I got in an argument, again, just like yours. Go ahead. I'm sorry.
Conceivably change to an entity and save yourself 0.5%. I don't think that would be worth it. And this 8% or 8.75%, this is, correct me if I'm wrong here, it's based on the check that you get, right?
Yep.
Not the sales price.
Right.
Gotcha. So if you only made $40,000, it would be like, $3,200 or something like that.
Yep.
Okay.
Yep.
Gotcha. That's a huge relief as well, especially if we sell a house for $400,000. Big difference between $3,200 and $32,000.
Right.
So that's great to know. And another thing that I see in the news a lot advertised, I hear it on the radio, I think more than anything, is this LifeLock title lock. Is this legit? Should people look into it? Like,
it is.
Pull back the curtain on this.
Right. So the commercial, what you see is two guys riding around in a car with a laptop. They pull up to a house and they say, "This is the one." What they're doing. So the term is really seller impersonation fraud. Even though that commercial, those guys are not looking to acquire the property fraudulently and then sell it. What they're looking to do is acquire the property fraudulently and then start to put liens on the property. So they'll take loans out as if they own the property. Next thing you know, the actual property owner is getting foreclosure notices. And
they're not paying the loans, obviously.
Yeah. Well, but then that kind of starts to lead us into title insurance. So what they don't tell you in those commercials is if you have an enhanced policy of owner's title insurance, then there's a protection in there. It's called post-policy forgery protection. So what would happen is those guys would fraudulently sign a deed transferring the ownership to themselves, which would be forgery because you as the owner would have to sign that deed. So that would then become a title insurance claim. And everything I've read about the title lock product, they just monitor. They supposedly, and if you read the reviews, a lot of the reviews are not good reviews. because it
It's like
has to.
credit. Isn't it
But
like credit monitoring? I have several credit monitoring things because everybody's always losing my information and they monitor it and then they alert you, but you still have to figure it out for yourself and everything. They just
what
let you
they're supposedly what they're doing is they're monitoring the recording process.
know. Okay.
So if a deed, if somebody's trying to steal your house by doing a fraudulent deed, they would have to record that in the land records. So what the title lock product is supposed to do is monitor the land records and then notify you if anything showed up in the land records. But again, you're going to want to Google that and look at the reviews, because everything I've read about it, it's like, yeah, I did a guy was talking about doing a refinance or adding his wife to title or something like that. And he's like, yeah, now I never got a notification about it, but I knew it was recorded. So I don't know. But anyway,
So let's go back to the title insurance for a second. So correct me if I'm wrong here because this is my dumb old real estate agent understanding of this. So if you get a basic title policy, it basically covers you from the time of settlement back in history, and then
yeah,
the enhanced policy takes you forward into the future. I'm oversimplifying it, but is that basically correct?
yeah. The basic policy is basically going to give you protections if somebody claims ownership in the property. So, for example, if I don't know, there's a story that happened years and years ago in Virginia. Virginia is different than Maryland, but if I bought a property and I was married and I was in Virginia, I don't have to tell my wife that I purchased it. But when I go to sell it, she's got to sign off on that.
Even if she's
And
not on the title or deed.
yeah, even though she's not, I think Pennsylvania's the same way. I think it's all the Commonwealth states.
I
But
think we're the
anyway,
ones that are different. Like, I think of us as normal, but when everybody comes here, they're like, "You're so different." I'm like, "I guess we are different. We do wet settlements and they do dry and all kinds of crazy stuff."
it's crazy. I think I would venture to say, and I've done business in a lot of different states. I think Maryland is one of the most difficult states to do business in from a title standpoint. There's a lot of reasons for that, but the main reason being that every single county and jurisdiction is like a different country or like a different state. So the recording costs are different for every single county. There's town tax, other than just the regular property tax.
Sometimes not. Yeah.
Yeah, and I mean, if you look at like a situation where like Baltimore County water is actually serviced by Baltimore City.
Yeah.
So when you come in from the outside, like when you do Virginia, it's county to county to county. It's everything's exactly the same.
Hmm.
So when you come to Maryland, and we see a lot of outside title companies coming from other states, and they just screw it up.
They butcher it. They
Yeah.
butcher it. Yeah.
So
And then everybody gets mad. And I tell you who they call immediately is good old Randy. And they're
right,
like, "This is getting screwed up." And I'm like, "I didn't choose that title company. You should have
right,
picked James."
right. I agree with that. Choose James.
So, what are some of the so title insurance? I heard I was at a conference one time and I was listening to a lawyer talk about title insurance and how a real estate agent had, not this one, of course, had said to his client, "Oh, you don't need that. That's not necessary," and stuff like that. And they actually at this point needed to do a claim on it because they had someone doing something. And the guy who was talking said, "Oh, don't worry about it. Your real estate agent will pay that." And I was like, "Amen, brother. You do not give your clients terrible advice and then hope that there's no consequences to that." So tell us a little bit more about like title insurance, why it's so vitally important, and maybe give us like an example or two of like when it got used or,
Yeah.
somebody who was really happy they had it.
I think that
So
the
many stories.
what's that?
So many stories, so little time.
Yeah, yeah. It's it's interesting because it's in the grand scheme of things when you're talking about, a few $100,000 asset, it's probably the biggest asset that normal people would own.
Yeah.
So when you want to protect the ownership rights to that, and it's not expensive. I mean, in the grand scheme of things, it's not expensive. I tell all people all the time, like, you have a car that you pay insurance on, you pay an insurance premium monthly, yearly, quarterly, however you have that set up, but you're going to pay that every single time for as long as you own that car.
Yeah.
And you're paying probably, I would assume, maybe $1,000 a year. So you're $1,000 a year. Let's say you own that car for 5 years. You're $5,000 into an asset that might be $20,000 or $30,000. Right. Whereas with title insurance, and there's two different types of title insurance. There's lender's title insurance going to protect the owner, and then owner's title insurance, which will protect the owner of the property. But you're going to purchase that at the time of settlement. It's a one-time premium, so you never pay another premium on that again. But let's say $250,000 purchase price for the owner's title insurance portion, you're talking about a one-time premium for maybe $950.
Yeah, that's
and
cheaper than your car. Yeah.
Yeah, and it's one time. So, and people say, well, why, if you say that it's inexpensive, why is it so inexpensive? And what it is it's risk. Everything's based on risk. So you drive your car every single day, the chance of you getting in an accident or somebody, not even your fault, hitting you, those chances are higher than actually somebody claiming that they have an ownership interest in the property because of the title search and things that we do ahead of time. But they still do happen. Those claims still do happen. You were talking about like some horror stories, and there's, you're talking about the title lock product as compared to title insurance. And there's something going on now. And like I said earlier, it seems like everything starts on the West Coast and moves over here. But there's seller impersonation fraud. And we get bulletins from our underwriter basically every day. And it just tells us like, hey, these things are happening. Be careful. Well, it's here. It's in Maryland, the seller impersonation fraud. And this is a little different than the title lock situation where they're liening the property. These fraudsters focus on investment properties or raw land. And the reason they do that is because people aren't paying attention to those as much as they are their primary. So what they do is they reach out to a real estate agent and they say, hey, I own this property. I want to sell it. And that agent, it gets all excited. Now I got a deal. They start going through the process. That property is then sold. The money is sent to the fraudulent person as, posing as the owner with, when I say posing as the owner, like fake ID, fake notary stamps, like the whole 9 yards. And then they take the proceeds and disappear. So, now from a title side, we have to start doing, extra due diligence. So we're going to ask you right up front, do you, have you met this person in person or do you know them personally? And if the answer is no, then that's a red flag. The other thing that we do is if the address on SDAT is different than the property address. So if I owned raw land, I wouldn't have them mail my tax bill to the raw land. I'd have them mail it to my primary address. Right. So those addresses are different. We're sending an actual letter to the primary address and saying we're handling a transaction for the sale of blah, 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 blah. We basically let them know this property is being sold. Is it you or not? The other thing that we do in those situations is it's a KBA, knowledge-based authentication. And you're probably familiar with this. This is the test that you take when they say, which one of these properties have you ever lived at? Which one of these cars have you owned? And if you're the actual person associated, you should be able to answer those questions pretty quickly. Yeah. So we have to go through a process based off of the red flags that we see and then determine like, hey, man, this probably isn't the guy. But again, in title insurance, so we had one recently in the local area. And like I said, we're seeing them all the time now. Like I'll get 2 or 3 a day and they'll say, hey, this address, seller impersonation fraud. But there was one that I heard about. I was talking to the guy that owned the title. It wasn't our company, but it was a different company. And I was talking to the guy that owned the property. He's like, yeah, that it happened to me. And basically what they did was they had this raw land. The raw land was sold to a guy, and he was building a house. He was clearing the land, started laying the foundation. And the next door neighbor to this property was actually the sister of the guy that actually owned it. And she called him and said, hey, I thought you said you weren't going to do anything with this. And he said, I'm not. And she said, well, they just poured a foundation. And he's like, what are you talking about? So he came out and he was talking to the guys, and they're like, well, this is the guy that owns it. He reached out to the guy. They had gone through settlement, and they had, they paid out the fraudulent owner. And this guy had invested into, I think he bought the land for, I don't know, like 90,000. And then he was basically having a modular home built, and then dropped on that foundation. That modular home was already built.
Yeah.
And he was billed.
Yeah.
So he put a title insurance claim in, and basically they basically paid him out and said, look, sorry, but it's not yours. It was never yours. So, but he had to recoup all that money. They had to pay that out. So,
and then this guy's got a foundation on his land now that he either, I mean, there's a million ways that could go. None of them easy or good.
Well, if you don't have title insurance, so people say, well, what if I don't get it? Well, now you're calling an attorney.
Yeah.
And if you say to an attorney, hey, I have a real estate problem, they are not thinking about a couple $100. They're thinking about a few $100,000, right. And they're going to bill you accordingly. So
yeah. The amount of research involved in that would just take you, through the roof right out of the gate. That'd be crazy.
It's kind of like pay now or pay a lot more later.
Yeah. So, I mean.
So never recommend, Randy, that they don't get the title insurance.
I just tell them, you know how like there's some things that you just do, like your heartbeat, you breathe, you just do it. You just do it. You just get an inspection. You just get an appraisal. You just get title insurance. You just do. Yeah. And I could go into it for hours about why you do it, but like, just trust me. So James, where are you guys at again? Tell everybody where you're at. Like I love your location because you've got everything in the world. You're like in this little self-contained city down there. It's pretty awesome. So tell everybody where you're at, address, everything. And I want to promote you and everything.
Oh, I appreciate it. So the office that I work out of is in South Baltimore and Locust Point. It's a little place called McHenry Row. And like you said, there's apartments, there's grocery store, other shops.
Yeah.
It's actually pretty cool.
Yeah.
And the greatest thing about where we are, even though we're in the city, is we have parking.
Yeah.
So there's a parking garage, there's a free parking garage. So people always say, oh,
in and out, super easy to get in and out of.
Yeah. No moving chairs in the snow to steal somebody's parking place. So no, it's easy to get in, it's easy to get out, it's free parking. But we're the actual address. So the company name is Community Title Network. The address is 1500 Whetstone Way, and we're in the basement of that building, T100, and that's Baltimore City, 21230. So if you're not really familiar with that area, it's kind of Federal Hill, next to Federal Hill.
Sure. Yeah. Down the hill.
Or what'd you say?
Down the hill.
Yeah, down the hill. If you go to Fort McHenry, it's right on the way to Fort McHenry.
Okay, gotcha. And if someone wanted to get in touch with you and ask you questions about title and or obviously use you for title, what would be the best way for them to get in touch with you?
Cell phone, which is 443-632-4642, or my email address, and it's james.schroeder@community, T as in Tom, N as in Nancy.com.
We'll put all that information in here as well. Thank you so much for joining me today. It was a plethora of information. I hope, it's not sexy, it's not fun, but it is so essential. And it's just something that we get started. Like we get under contract, we give it to you the first day because it takes time, and we want to make sure everything's right. You do not want to buy a house and then have title issues later. That's the kiss.
No.
Thank you, James. I'll see you soon. Appreciate you.
Yeah, I appreciate you having me and the trust that you have me to have me on here.
Thank you. See ya.
All right, Randy, take care, buddy.
Bye.